Hello everyone, welcome to my channel Ease at Economics. In this video, we are going to learn what is economics, what are the two branches of economics, with its meaning and various aspects. Let's begin with understanding the definition of economics. In simple terms, economics is the study of choice-making behavior of people, businesses, governments and society, which arises due to the fact that resources are scarce and human wants are unlimited. So economics study this choice-making behavior of how to use these given resources in such a manner that the maximum possible needs and wants are satisfied. We can further understand the definition with the help of a flowchart. This flowchart here explains that human wants are unlimited. Since humans are greedy, they have multiple desires, and as soon as one desire is fulfilled, the other emerges. And the resources to satisfy these unlimited human wants are limited. Let's take an example. With a given pocket money, you can either buy a gift for your friend's birthday or you can go and enjoy a movie. In this example, pocket money is a resource which can be put to more than one use. Due to this, problem of choice arises. Economics is the study of how people make choices in the face of scarcity. In other words, it helps us to study how human beings make choices for allocating scarce resources to satisfy their unlimited wants through production, distribution, and consumption of goods and services. Moving on, let us understand the two branches of economics. First, Microeconomics. It studies the behavior of individual economic units such as household, firm, etc. Second, Macroeconomics. Study the behavior of economy as a whole. Now if you will look at the given picture, you will see in microeconomics the person is looking at a single individual at a time. So it shows that microeconomics, it analyzes the behavior of individual economic unit, whereas macroeconomics, you are looking at the whole picture. So macroeconomics is analyzing the behavior of economy as a whole. I know for beginners it is difficult to understand just from the definition, so let us cover the various aspects of microeconomics and macroeconomics in detail. Let us understand about the questions with which microeconomics and macroeconomics deal. Microeconomics deals with questions such as what is the income of a household, what is the price of a good, what is the output level of a firm, how many employees are employed by a company. Whereas macroeconomics deals with questions such as what is the national income of the country, what is the inflation rate in the country, what is the total production in the country, what is the unemployment rate in the country. Now if you will compare the two, you will see that microeconomics is dealing with the income of a single household. So it is analyzing the behavior of single individual unit, whereas macroeconomics, it deals with the national income, which is the total income of the economy. Similarly, microeconomics deals with the price of a single commodity, whereas macroeconomics, it deals with the general price level in the economy. Now the tools which are used to answer these questions under microeconomics and macroeconomics are: in microeconomics we use demand and supply, and in macroeconomics we use aggregate demand and aggregate supply. Next we are discussing the theories which are covered under microeconomics and macroeconomics. So theories which are covered in microeconomics are theory of product pricing, theory of factor pricing, theory of cost revenue, etc. So in microeconomics, the tools of demand and supply, they are used to determine the price of a commodity or factors of production. Therefore, microeconomics is also called as price theory. Theories which are covered under macroeconomics are theory of employment, theory of money and banking, government budget and fiscal policy, interest rate and monetary policy, etc. So the tools of macroeconomics, aggregate demand and aggregate supply, they help us in determining the level of income and employment in a country. Therefore, macroeconomics is also called as income and employment theory. Now, what are the objective of microeconomics and macroeconomics? Microeconomics, it will look at the main aim of microeconomics is analyze from individual point of view. So for consumers, it will be to maximize utility, and for producers, or you can say business or firms, it will be to maximize profit. Whereas macroeconomics aims at maximizing the welfare of nation, and how the welfare of nation is attained by ensuring full employment, economic growth, price stability, favorable BOP. All the aspects of microeconomics and macroeconomics are summarized here in the form of a table. From CBSE point of view, this is an important question. It is quite frequently asked in exam to explain the distinguish between microeconomics and macroeconomics. Now let's discuss, are the two microeconomics and macroeconomics independent of each other? So first we'll understand that microeconomics is derived from the Greek word small, and it analyzes individuals. Whereas macroeconomics, it is derived from the Greek word which means large, and it represents or it analyzes the aggregates. So if you will notice in the picture in the diagram also, I have highlighted I in the microeconomics and A in macroeconomics for you, to make it easy for you to memorize that microeconomics is for individuals and macroeconomics is for aggregates. Now, without understanding the behavior of individuals, the behavior of aggregates cannot be analyzed. So if you want to analyze, if you want to study the behavior of the whole economy, you have to analyze the behavior of individual units also. Similarly, to understand the full impact of a policy change, its impact on individuals must be analyzed. So we can state that microeconomics and macroeconomics they are not independent of each other, rather they are interdependent on each other. That's all for today. I hope you liked the video. For more such content, hit the follow button and share with your friends.